Morning, guys, and welcome to Morning Joe with me, Jim. And I'm a bit earlier. Normally, we do this Tuesday through Friday at 8 a.m. And go live and talk about some tip or trick or something about the home buying process, right? But I have an 8 a.m. appointment I've got to run to. I don't know why I scheduled it right then, but I did. So I want to talk about the Fed, right? The Fed increased interest rates by 3/4 point, just like they kind of telegraphed and we all expected, and that's what they did. Those are short-term rates. And like I said yesterday, if you watched my video yesterday, you do watch every day, right? Please. And like I said yesterday, that should, all things being equal, push mortgage rates down just a little bit. And in fact, it looks like it did. So this is the chart of mortgage-backed securities. Mortgage rates are determined by bonds. I don't know if you know that, but it's mortgage-backed securities are the bonds that determine mortgage rates that all lenders look at, and we have our base rate, and then you may add a better subtract or whatever, but that's why all mortgage rates are about the same, right? You're within a quarter point, no matter what lender you go to, give or take. And normally it's tighter than a quarter. And it's because we all get our money from the same place. It's these mortgage-backed securities. Or we give them to the same place anyway, long story short. So this is yields. As yields are going down on securities, on these mortgage-backed securities, rates are going up. So this downward trend is not your friend if you're buying a home. It's not my friend. I know that. I don't like it. But look at this. Yesterday, we were on this trend kind of bouncing off it, up and down and off it. It looks like yesterday we ended the day kind of breaking the trend a little bit. We'll see. We'll see today if that holds true. But if it does, we've got a long way for yields to rise, and that means rates to fall, right? Remember, kind of turn this on its head and you see what rates are doing. They've risen quite a bit, and now we have quite a bit of room for them to fall a little bit. And I hope that holds true. We'll see today. We'll see if that trend, kind of holds at all. I suspect it will, but we'll see. And it's interesting because during COVID, especially, a lot of people got into stock trading, day trading, or trading options or something like this. Everyone was at home and kind of bored. And so how do you make a little extra money, right? And a lot of people did that. Financial planners will tell you, no, go for the long term, right? Go for the long hold on stocks, on whatever it is. And dollar cost average, right? Keep putting a little bit of money in and it's great advice. I'm all for it. I think it's absolutely great advice. However, it's kind of the opposite when you're buying a home because you're under contract and you're closing within like 30 or 45 days. So you're like, what's the trend? What's the trend doing? Should I lock or should I float? And that's the decision, right? Should I lock my rate now or float for a couple of days or whatever? And that's part of my job is to at least counsel. No one can guarantee it, but at least counsel. And like yesterday morning, we got a contract in, and my suggestion was, we can lock if you want, and here's your rate. I would suggest floating. And I don't do that often, but I guess I do sometimes, because it's kind of a day trading atmosphere because you go with the trend, right? Now, buying a home, on the other hand, is kind of like the financial planner would tell you in putting money in the stock market. You put it in, you buy the home, you wait, because markets fluctuate, rates fluctuate. Now you may want to refinance, and that's where I come in too, to say, hey, we locked you at whatever it is, 6%, but now rates have fallen to 4.5%. It's time to look at refinancing. Well, that's part of it. But as far as owning the home, if you're in it for the long haul, if you're going to own the home for 5, 7, 10 years or more, it's almost always a good time to buy. Almost. There have been moments where it wasn't, but it's almost always a good time to buy and hold, because over time, kind of like stocks, you make out really, really well. That said, when you're looking at buying and locking the rate, that's where the technical analysis comes in, and it's kind of like day trading almost. And we look at what the trend is in rates and see if it's good to float or lock. Right now, it's good to float and lock in a day or two, it looks like. And that's all because the Fed raised short-term rates, so long-term rates look like they're headed lower. I hope that helps. If I can help you with a pre-approval today, let me know. I'm happy to. Awesome.